Your stock screener is basically like your, like call it your right hand man in the investment game. And what this stock screener basically does, or what it offers
I
you.
don't notice. Say you want to do me with time.
So these are the 6 modules that will be taken in this stock investing masterclass, and we'll be going as the journey goes. We'll all go with the journey. Yeah. So the first one, like I said, this is module one, and this is basically an introduction to stocks. Right, so we're looking at 3 components today. We're looking at the introduction to stocks, investment tools and resources, so that you can begin to get those necessary tools you'll be needing in the coming weeks. Right, we also note your your financial goals. You might not have to begin to invest or trade immediately, but like you begin to understand, okay, what do I want? Okay, you get, what do I want out of this? I'm going through this lecture. Okay, what position am I taking? Do I want to do this? Do I want to do this? So you can really set your mind so that as the information comes, you get to know that, okay, this is for me, this is what I'm doing, this is how I'm going to do it. You get, so you're not just stuck in the mix and you don't know where you're going. Right. So let's just go straight into what we're going to do today. So we're looking at stocks, and most people can, or like I say, most people call it shares, most people, some people call it equities, you get. So they basically mean the same thing: stocks, shares, equities, and they basically stand for ownership in a company. And I'll give an illustration. Let's say I have, okay, name just give this illustration because everybody is on the Financial Liberation Academy. This is the Financial Liberation Academy, so I'll just try to turn it into a company. Now, let's say this is a company, right, that is involved in productive activities, and let's say we produce, we don't necessarily have to produce anything, but let's say we're just into a productive activity, right, and we need to raise some capital, you get, and we say, okay, we do the registration, regulation, and all other necessities, and then we determine that, okay, we're going to have 100 million authorized shares, authorized stocks, right? And then we now determine that the nominal value will be, let's say, 2 naira per stock or 2 naira per share. And this means that I'll also talk about this, but thank God I'm putting it now so you understand. This basically leads to what people call market capitalization. This is how market capitalization comes about basically, right? So you can have the nominal market cap and you can have the market value market cap, like the current value market cap, right? So when you buy a stock, what you're basically doing is that you're buying an ownership in the company. So now I'm giving that illustration. Let's see the Financial Liberation Academy. So basically there are 100 million stocks, right? If you want to get let's say, and I said one costs 2 naira, right? Let's say you now want to get let's say you have 200,000 and you want to invest everything, right, in it, which means that for that 200,000 you're going to get only 100,000, right, of the shares because it's 2 naira per, you get, so you get to get 100,000. So what this means is that your ownership in the company is that 100,000 you purchase divided by the 100 million total shares it has. So that will give you your percentage owning in the company. So that's basically how the stocks or shares work. So, and your ownership in that company can either entitle you to dividend, right, or it could entitle you to voting rights in the company. Now, when you talk about dividend, not all companies pay dividend. Let's just be clear on that. Some companies decide to pay, some companies decide not to pay, right? And for those companies that decide to pay, what are the stocks of those companies are basically known as dividend paying stocks. While some other companies choose not to pay, and there's no offense in that, right? Just take it like that. When we look at the aspect of voting rights, it's just basically the right to take certain or to have a voice in certain decision making activities in the company, right? So let's say we have the annual general meeting and the company wants to take a decision on something, so your voting right gives you um that power to either be in support or not in support of that certain policy or activity that's going on. So this is what a stock can entitle you to, right? And like I said, I've given you that illustration of what a stock is using the Financial Liberation Academy. So that's basically how all companies work. They need certain funds, then they go ahead to make an initial public offering, Right? You often hear in the world of investment, stock investing, you often hear of the word IPO. So this is what the IPO means: the initial public offer, or the initial public offering. This is the company making a statement that they want to raise funds from the public, and this is how they go about it. Now, you've looked at what stocks are, and we look at how they operate from that example we've given. Now let's now look at the types of stocks. So basically we have nine. From my research and from my field experience and theoretical experience too as well, we have nine types of stocks. The first one I'll talk about is the ordinary stocks, or the common stocks as some people will call it. Now what these stocks entitle you to is voting rights. Now, the ordinary shares or ordinary stocks entitle you to voting rights. So, an owner of an ordinary stock is entitled to a voting right. For those that will want to go into digital investing, you might not have to familiarize yourself with all these terms, right? Because all you are looking at is the your app for investing, your tool for investing. Then you are taking positions on your trade and the likes. But for those who want to go into like the physical form of investing, where they actually I remember some months back MTN made an announcement where they released some stocks out to the public at about, I think, 190 something or so, uh, and they made it open to the public and people came. Now for those ones, if you want to be physically active, you might then be involved in all these voting rights and the likes, right? In the annual general meetings, you might want to take cognizance of all these things. But for most people, they don't. They just want to invest, just want to make money. That's basically it. They're not interested in the voting rights of the companies and their activities and all of that, right? So that's basically it. Now we'll look at the preferred stocks. Now for the preferred stocks, what this is basically, okay, if if the company is giving out certain profits or certain uh, distributions out, the preferred stocks will get it first before the ordinary stocks, and the preferred stocks do not have a voting right. So that's basically the difference between ordinary stocks and preferred stocks. Now let's now look at blue chip stocks. Now blue chip stocks are basically stocks of blue chip companies. What these companies are, or what these stocks do, or what they deliver, is that they are known for stable performance. Like over the years, you see a positive trend line. Is the performance is normally stable, right? It's not like one day or 1 year it is hitting 20, let's say 50% growth. Next year is hitting minus 20%. Next year is hitting minus 30%. The fourth year is now going into profit again. Now blue chip stocks are known for stability, and that's why they are most preferred against all other forms of stocks. Stability. And some of these stocks, as you know them, we have the likes of Apple, Microsoft, and like these are blue chip stocks. Now, another type of stocks, another classification of stocks we have is the market cap defined stocks. So the market capitalization defined stocks, and there are three basically under this. We have the small cap, we have the mid cap, and we have the large cap. Right. So for the market cap, what this is basically saying is that, okay, remember earlier I talked about market capitalization and how to determine market capitalization. Now, different exchanges give well, I say the boundaries for this definition of small cap, mid cap, large cap. For some, they have a certain way. Okay, this to this is a small cap, this to this is a large cap, this to this is a mid cap. For other exchanges, might be different, right? So you have to familiarize yourself with the one particular to your stock exchange. And the fifth one we're looking at is the growth stocks. Now, for the growth stocks, these stocks are basically known to have above average earnings. When we looked at, I think that was the third lecture we had, when we looked at the risk and return aspects to different asset classes. Right, for stocks, we have the average performance basically is between 15 to 20, no, let's say 10 to 20%, right? 10 to 17% for some to get. So when you see a stock hitting the likes of 30%, now that's above the average. These are growth stocks. So when you see stocks that people perceive to have an above average um rate of return. These stocks are known as growth stocks. Right, so I hope you guys are understand these things. I hope it's not too complex yet. And then we'll look at the sixth one, look at value stocks. Now, this one, if you want to, like say, have a proper understanding of this, you basically have to stick with me till we are done with fundamental analysis, because we will have to calculate the intrinsic value of a stock, right? And then you see that for some stocks, right, after you calculate the intrinsic value, you do your calculation and you see that okay, this is what this stock is meant to be, or like this is what is the worth of this stock is meant to be, and then the market value is showing something lower, and then you're like, but the performance of this company using the financial statements and the fundamental indicators show that the stock should be, let's say, worth 50 naira per stock, but then it is worth 36 naira due to in the current market value, and then you're like, this stock is actually undervalued, right? So for value stocks, people actually buy them because they are undervalued and they perceive that in the coming years, people will realize that this stock is actually a very good stock and then they'll begin to buy it. And when people begin to see the value in a stock and begin to buy that stock, the value begins to appreciate. So this is the benefit of doing value stocks. And when you are investing in value stocks, what you're basically doing is value investing, which is an investment strategy I talked about. For growth stocks, what you're doing is growth investing, which is also an investment strategy I talked about. Now, for the seventh type of stocks, we're looking at dividend stocks. So what this is about is, now, like I mentioned earlier, we have companies that choose to pay dividend. We have companies who don't pay dividend. For those that pay dividend, their stocks are known as dividend paying stocks. So what this means is that at the end of the year or at the end of a certain period, you're entitled to a portion of their profits. And this could come in the form of, it come in diverse ways. Some tend to do it annually, some tend to do it semi-annually, some tend to do it quarterly and likes. And how you know this is when you are looking at the fundamental indicators, you check the P/E ratio, you check the dividend yield. Right? This is how you ascertain, okay, is this company paying dividend or not, right? Then the eighth type of stock is the cyclical stock. Now this stock have, they are like, when we say bread and butter is 5 and 6, right? These stocks are basically 5 and 6 with the economic, the movement of the economy. So if the economy is good, the stocks are good. If the economy is bad, the stocks are bad. That's how they move simultaneously with the movement of the economy, or this the welfare of the economy. An example is the automobile industry. When the economy is good, people have greater disposable income, people can spend more. Right, so people tend to want to, okay, upgrade their cars, to get buy a new automobile or something like that. But when the economy is bad, nobody is thinking about that one. You get, nobody is thinking about upgrading and buying a new car. People are talking about food, welfare, and the likes. This will now lead us to the ninth type of stock, which is the defensive stock. So, just like cyclical, that is basically moving with the economy, with the state of the economy. Defensive stocks are basically, they tend to, will I say, remain stable despite the movement of the economy. An example is utilities. All these essential products that people need: food, utilities, healthcare. No matter the state of the economy, people will still buy food because you have to eat. No matter the state of the economy, people will need electricity, water, all those kind of things. These are utilities. So these are basically defensive stocks. And how you can begin to apply this, or how you can begin to look at this, is that you look at companies in the healthcare sector or industry, and then you buy some stocks in them, right? Different companies operate in the healthcare industry, so you buy some stocks of these companies. Utilities, consumer staples like Coca-Cola. In Nigeria, we have likes of Biggie, Pepsi, and the likes, right? So these are defensive stocks. Now let's now move on to the investment tools and resources. Now you have to follow me clearly because I'm going to be mentioning a lot of things that you should start getting, you get, for future classes. So when we look at the investment tools and resources, because as an investor, you cannot do without the world of news. You cannot do without the world of tools. You cannot do without some certain things, some certain tools, right? And we'll look at the apps for investing because that's the first point under this. There are basically two major apps that I use, and this is determined by for you it's going to be determined by your investment your financial goal basically. So if you're looking to day trade, if you're looking to swing trade, if you're looking to position trade, if you're looking to do a long term trade, you might still look at the long term trade is just like okay, you can still do that because you see part of it. But the major focus of this app I'm about to mention is the day trade, swing trade, and position trade, and this is linking up to the MetaTrader 5. MT5. So if you don't have that app, I believe you should get it on your mobile device, on your laptop or wherever, because that's basically what we're going to use in the coming days. And the MetaTrader 5 is basically where you begin to trade your stocks. You basically need to, will I say, have a broker. You need to do all the registration. For me, I use Xness. There are so many others you can use. For I know of hot forex. I know of IC markets. I know of derivatives for indices and some other commodities. But for if you want to go into stocks, then Xness and some other ones, IC market, there are lots. You just have to choose a reliable broker, and you get on your way. If you just want to focus on long term investing, you don't want to look at the chart, you don't want to look at patterns, you don't want to do all of that, then you just go to Truth, right? Truth is the best app for that. And when I'm handling my financial consultation sessions, this is one app I recommend for those who want to do long term. Truth, and you can get it on your Google Play Store or your Apple Store, wherever it is. So these are the two apps you'll be needing. Then you also need to stay abreast with financial news. So for Nigeria, we have Naira Metrics, we have investing.com, we have Business Day News, we have a whole lot. You don't have to restrict yourself to one. It's even best that you actually maximize everything. Okay, you wake up in the morning, you do your chores, do whatever you want to do, early morning routine, then you check your news. Okay, what's happening in the financial market? Which company is buying which company? Is there any policy that is favoring one sector? Is there any policy that is favoring one market? Okay, what's happening in this exchange? What's happening in Nigeria Stock Exchange? Are the stocks basically gaining? Are the stocks basically losing? What is the overall performance and all of that? This is how you stay abreast with the financial market, the financial news sources. And just like I've mentioned earlier, we have Business Day, we have Naira Metrics, we have investing.com. There's a whole lot. There's a whole lot I can begin to list. So you check, just open Google and be able to check financial news in Nigeria. You see a whole lot of sites pop up for you. Then the last one that you can all do without as an investor is your stock screener. Oh my God, your stock screener is basically like your, we like call it your right hand man in the investment game. And what the stock screener basically does, or what it offers you, is that it gives you both the list of stocks, it gives you the fundamental analysis, the technical analysis, and a whole lot of others. Performance, that is performance. We can look at year to date, daily, weekly, monthly, past 10 years. Like your stock screener basically gives you all that information, right? But for me, when I'm in, let's say, okay, because I normally do my own analysis from when we get to the month of December, November, December, that's when I begin to do my own analysis. So I begin to look at the performance of stocks and project, calculate the intrinsic value and begin to project for the next year, just like I did in 2022 ending. And I projected for Okumu Oil and Nestle. And for Okumu Oil, I projected that it should be about 33 point something percent at the end of this year. Currently, when I checked last, it was about 27.6 something, so which is close and which is very, very close to my analysis. And there are still some months, so there's a probability that it can still hit that. So let's be expectant and let's see how that goes. Uh, so, but then when you do your analysis, right, because November, December is when people are like holiday period, you are less busy and stuff. So that's when I have my time to actually analyze. But during the buzz and the movements of the year and everything, when you can hardly have time to actually sit down to